that sound means we are now live here. It's Tackle Trading's Halftime Report, our daily show where we break the markets down one step at a time from a top-down analysis perspective, analyze the charts on the S&P, the Dow, gold, commodities, currencies, individual companies, whatever's grabbing our attention that we feel like we've got to analyze, give you guys some insight so you can better run your daily routine. Last day of the month here for trading in November. It's been an incredible month in stocks. Stocks are kind of hesitating at resistance, a little bit of a sell-off as markets trying to find themselves, what the themes are going to be moving into the month of December with the holiday season and whatnot. Cyber Monday today. We had Black Friday data that came out on over the weekend as well. A lot of sales going on out there around the world with companies, and we've got a full crew here to break and analyze every step of it down. Let's start with you, Maddie. How you doing today, sir?
Tim, doing good. Excited to be here with the crew to break down the market here today, and a lot of action. Bitcoin doing some crazy things. Black Friday sales, and we got some pretty important merger and activity type. Some acquisition conversations that are coming to fruition today with Slack and Salesforce. So it's a fascinating day in the market, and fascinating week coming into potentially breaking out of the market.
Yeah, a couple of M&A items, obviously, that we'll talk about a little bit later. S&P Global, obviously, making that acquisition as well. A couple of interesting ones. But I actually do want to start with the technicals here, Matt, because we're just kind of hesitating. We had more virus news to start the week. It was another Monday where we came out. Moderna from 2 weeks ago was talking about getting emergency use authorization. We'll look at the chart here in just a minute. But outside of those other Mondays that we had all the way through November, Matt, the market is not opening up on a bullish note. Kind of natural hesitation here as we're at resistance. Let's start with the NASDAQ, the S&P, either one. Kind of give me a read on what you're seeing there technically.
Well, technically, I think we're just hesitating here at resistance a little bit. Obviously, the market's down a little bit here today, testing that 3,600 significant whole number zone right there where the 9 EMA is as well. You can kind of see the market tested that rising 9 EMA. This is a lot of times what happens in high base type setups. This is a lot of what happens when you're talking about momentum type setups as well. And so when you see this snapback bull flag coming into the rising 9 doji upward movement price, that's pretty standard technical analysis. As you're approaching resistance, a lot of times that will continue to break out. It didn't. It hesitated at resistance, and now you're seeing that high base form here, testing that resistance. You could call this a little bit of a cup and handle depending on how much time period goes into that potential breakout as well. But when you're looking at the futures market, I guess my read on it here on the daily chart is pretty simple. You're looking at this as a bullish trend with a bullish pattern threatening a breakout. And whatever happens between 3,600 and 3,650, you really don't care in that range. You really don't care one way or the other. The daily chart here is really easy to read. I think what gets a little complicated, and this isn't abnormal coming out of a long weekend where Thursday, Friday, Saturday, and Sunday there's not obviously a lot of market activity. You got 4 days price action, you have Black Friday, you got Cyber Monday, you got all this news, vaccine news, economic news. So you have a lot of news coming in those 4 days that you just don't have a lot happening from a price action perspective. So you're typically going to get a little bit of a volatile reaction coming out of that weekend. And when you're looking at this on a 30-minute chart here, you can kind of see what I'm talking about. Once again, on the daily chart, it looks fairly clear here. On the intraday chart, it does not look very clear. You see when the futures market kind of opens up here yesterday, it gaps up initially, and there wasn't a lot of positive news outside of just the initial, Black Friday data that came out. But after that, all through the European hours, all through the Asian hours, not the European hours, but all through the Asian hours, you saw this downward movement in price, recovered a little bit during the, early morning in Europe. And then when the cash open happened here in the US, you just had that little downward movement price. So right now, with the hesitation on the daily chart at resistance, you got a pretty clear read here on the daily chart. You're looking at this, 3600 level, and you're saying, okay, let's see if that holds right there on the 9 EMA. Let's see if we can consolidate a couple of days and then ultimately break out. It doesn't really matter what happens in the short term. If it dips underneath the 3550, if it consolidates at 3600, you're still, if you see a trade, you're going to take the trade. That's number one. But ultimately, you're looking at this as a breakout perspective. But you're little concerned just because you don't have those multiple time frames aligned yet. And so right now you got a little bit of a downward movement in price on the intraday, got a little bit of a bearish retracement on that intraday. Looking at the daily chart, you're looking at this as a little bit of a breakout. So let's give it a day, let the market shake out a little bit. The NASDAQ's recovering so far early, a little bit stronger earlier on today. So I don't see this as relatively weak, to be honest with you. All I'm seeing really is the market hesitating at resistance, and it's showing a little bit of mixed data from an intraday perspective.
Mark, obviously there's some interesting headlines over the course of this holiday weekend, which is a long weekend. A lot of people coming back for the first trading day if they skipped on Friday since last Wednesday to kind of digest. Obviously, we're at resistance. We've got technical hesitation here. You've got the last trading day of the month, and then you've got this vaccine news out of Moderna looking for emergency use authorization. What's grabbing your attention most here, Mark, as the markets are stalling? I mean, what's your read here?
Well, the technical battle at resistance, it's one of the things we talked about in the weekend prep class last night, is like on a lot of trades, and it doesn't mean everything, right? Because some things can run counter to the market, that when you have technical resistance on the broad market, waiting for that to break out before you engage in trading, like you might be able to find the diamond in the rough somewhere, right? But it can be a little bit difficult because, rising tide lifts all ships. But as far as the big picture news, I mean, right now we're heading into this holiday season and looking for a catalyst. I mean, that's what you really want, that theme, that catalyst, that theme to get the market excited. And we're waiting for that, right? We're waiting for that one specific thing. And, coming into this week, we got Jerome Powell speaking a couple times. Let me guess, he's going to say we need more stimulus, right? We need more fiscal stimulus, and that he has a wide range of tools that the Fed can use to help prop up the market. We know that we know what Powell's going to say before he says it.
I was going to say, Mark, it's almost like you've heard a few Powell one-liners in your life.
Like, yeah, I mean, we know, and the market can react different ways when Powell speaks. Sometimes when Powell speaks, the market does nothing. Sometimes when Powell speaks, it can cause a little bit of a sell-off. Every once in a while, I mean, very rarely when Powell speaks does the market go up.
Well, but what has Powell been saying for 2 months now? I mean, every time we need fiscal stimulus, right? That's all he says. And so whenever Powell speaks, he's like, yeah, okay, it's just that gentle reminder, but economically, we're not out of the woods here yet economically. Okay, it's just a gentle reminder more than anything else. But Mark, regarding stimulus, I have seen the chatter politically being put a little bit more pressure recently, just in terms of, both Democratic and Republican pressure being mounted, dealing with the COVID crisis. We have positive vaccine news, obviously. We're now, honestly moving into it. It's amazing, but we're moving into the conversation on the vaccine fairly quickly to, not if this is an effective vaccine. I think everybody is now starting to accept the fact that it is an effective vaccine. Mm-hmm. I know personally, and I can only talk about this personally, I'm more confident taking the vaccine, coming out in the second quarter of this year than I was a few weeks ago. And a lot of that is based on what the pharmaceutical companies are reporting, no doubt about that. But the government is now not talking about the production of a vaccine, but the actual complications in distribution of this vaccine. And so obviously we're taking positive steps in that vaccine conversation. But with the stimulus conversation, Mark, do you feel like let me just give you my take. I personally feel we have stimulus on the plate. It's going to happen. Where's your head there, though? Because it's not a clear analysis. It's more speculation than anything. So where's your take on stimulus conversations? Because Powell's going to talk about it.
I worry. Like, and Mitch McConnell, the stone cold killer Mitch McConnell, and once again I have to qualify everything political. I say that as a compliment.
He does say that as a
I
compliment.
say that as a compliment towards Mitch McConnell. The stone cold killer Mitch McConnell, I think, is going to be very, very, very stingy in his negotiations.
Mhm.
Now, the market hasn't seemed to care about stimulus for a while. You know, it's funny, right? We had stimulus problems and the market was going up in August, right? It didn't matter. You know, stimulus bill delayed, market doesn't care. It is funny how the market doesn't care about something until it does.
That's right.
Yeah.
Yeah, I mean, and literally, Mark, during those couple of periods, during the month of August, everybody was waiting on stimulus. They were missing deadlines. The market went parabolic. In the last few weeks, we've had tone and conversation from Mitch McConnell. You mentioned him, that stimulus is a priority, but we're not making any progress on it. I think the market's gotten to the point where they accept whenever stimulus happens, Matt, it's going to happen for the market, you know, and I think whether that's January or February or this month, I don't think that part is as important.
No, neither do I. I don't think the timing is as important right now. I think it's the market getting to the belief that it's going to happen, and I don't think that belief is there yet. I think there's speculation, but I don't believe the belief is actually there yet. It could maybe, you know, with Janet Yellen taking over the Treasury and, you know, ultimately merging with the Fed. And I say that kind of jokingly, but also kind of, you know, half a little concerned in that. But it's going to be interesting if we do see that conversation start to heat up a little bit as Janet Yellen takes over running the Treasury. And, you know, my God, Mark, how many times this pal literally begged on hands and knees for fiscal stimulus?
You know, and it's the one thing heading into this week. Now we got some China news to start the week. We'll talk about that in a second. But the one thing heading into this week at resistance, because right, like when you're at support and Jay Powell says we need more fiscal stimulus, it's one thing. When you're at resistance and the market's looking for a reason to go higher to break through, and then he says, because the one thing you have to know, it's not just that he says we need more fiscal stimulus. The language he uses associated with that is basically, and let me give it to you in layman's terms. Hey, you freaking idiots in Congress. This economy cannot get rolling again unless you pump more money in.
Yeah,
that is essentially what he is saying, and he uses more flowery language, right? But it is with a lot of urgency that without the fiscal stimulus, we are not going to get this. People are talking double dip recession everywhere. JP Morgan, other analysts, other banks, basically saying, we know we're on a short-term path to a double dip. Like that's almost like just accepted now.
I get it.
But all those same,
hold on.
Every one of those banks just put out a price target on the S&P in the last 2 weeks, and they're all extraordinarily to the upside. So they can sit and talk about recession data till the cows come home. Come on, they've been talking S&P 4100, 4300,
3900. I mean,
don't give me.
Morgan Stanley has a 3950 projection by the end of the year.
Yeah.
So I know what the banks are talking, but I also know where their price projections are. And a couple things need to be said here. Number one, and the banks know this, the stock market is not an indication of economic health. It's just not. They're disconnected from one another. So when we're talking about the stock market at all-time resistance levels and breaking out of resistance and going up to 38 or 39 or 4,000, I promise you the banks aren't looking at it from an economic perspective. They're looking at it from a stimulus monetary perspective. They're looking at it from an earnings perspective. They're not looking at it from an economic perspective outside of economic reopening. But the second thing I want to point out here is a double dip recession. What are we doing, guys? We're still in the recession. To have a double dip recession, i.e. Japan, you have to come out of the recession. And technically speaking, and I hate to be a stickler for the textbook definitions of recessions and depressions, but from a textbook perspective, we're still in the recession. You can't go double dipping unless you come out of the recession. And so what I believe the banks are doing is they're really projecting what I've been talking about all year long, and that's not a double dip recession, and that's not a V-shaped recovery. See, the analysis of the double dip recession, they're assuming that V-shaped recovery was an actual economic recovery. It wasn't an economic recovery. What we're seeing here is a U-shaped economic scenario where you stay at the bottom and then over time you grow. And so it just takes time. And I know in the world of digital media where everybody's opinion changes every 5 seconds, I get it. But the reality is we're not double dip and recession here. We're not V-shaping economic. We are in a prolonged U-shaped economic period where you have to have the constant maintain of fiscal and monetary stability, or not stability, but stimulus to create stability. If you want to come out of the recession, you need to first start talking about taking money away from the market, and the market still appreciates. We're not there yet. We're a long way from there. So I get the conversation on double dip recession, but very, very similar. The same thing I said 6 months ago when everybody's talking V-shaped recovery. I said, no, that's not in the cards here. It's not in the cards. Labor market's not going to support it. But we could be in that U-shaped period. The data suggests we're in a U-shaped prolonged economic recovery right now. And so you're only double dipping if you believe the premise that we actually came out of the recession in the first place. Personally, I don't believe we ever came out of the recession. We haven't had enough time to really determine that economically. So I've seen the conversations on double dip recession. They're wrong completely. It's lazy analysis.
Mm-hmm. Yeah. And so I don't think necessarily whatever JP Morgan's talking about going into a double dip recession the first quarter of 2021. First of all, I don't believe that that's their form of analysis, because I think JP Morgan has those targets mark around that 4,000 mark as well, if I remember right. So what else is out there right now?
Well, remember, somebody can say, remember, the market and the economy are not tied to one together.
Yeah, you can have a.
You can actually. That is not. It actually. You can have.
That could happen.
Sure.
That could actually happen. Right, you could have a double dip recession. I don't think it would be first, second quarter. Again, you need time periods between these things. You need a recovery in between these things. But could a double dip recession actually happen, circa what Japan has went through in the last 20 years? Yeah, that's the economic philosophy we're building towards. That's the monetary philosophy we're building towards. That's what we've designed from a modern monetary theory perspective. But it took Japan a good 15, 20 years of doing this. We're still young pups at it. Give us some time. We'll figure out modern monetary theory one way or the other.
Sure. As I'm looking across these markets, guys, thinking about the news this morning, obviously, I do want to get a breakdown of all the technicals, and I do want to take a peek at Moderna. Matt, why don't we flash through the Dow, the NASDAQ, the Russell, and then bring up Moderna after we're done with the indexes. I want to have a conversation about that vaccine candidate for a second, but let's start with the technicals.
Yeah, technicals very quickly on the other indexes. You're looking at that $30,000 breakouts, the same type of analysis. You're looking at the 3650 breakout on the S&P. You're looking at the 9 EMA here on the Dow. You're looking at that 30,000 significant whole number and ultimately reclaiming that significant whole number. Coming into the Russell 2000, you're seeing the Russell 2000 ultimately is the strongest area of the market right now. Can that last? I don't know. We haven't seen the Russell be a leader in the market to the top side for quite some time, really since 2017, early 2018. So it's been a few years since the Russell 2000 has led the market. Right now, in this post-election type market analysis, Russell 2000, small and mid cap stocks are leading the charge here. That is a positive thing. Can the Russell 2000 ultimately continue leading the charge? Will give people a lot of confidence in the blue chips, pushing through resistance as well. Right now, you're looking at the Russell 2000 as a bullish uptrend. You're looking at as a high base pattern, and you're looking at resistance, overhead resistance on the breakout. You'd be looking at that 1863 level. You got a double top right there at about 1850, 1856. So you got an aggressive trigger on that high base. You got a conservative trigger on that high base on the Russell 2000. I know Tyler, who loves this like all of us coaches at Tackle, we have our little things we like, right? Just things we've done over and over and over again. Tyler loves the Russell 2000. He's obviously celebrating what's happening here, and Tyler believes it's going to continue. I believe it's going to continue in the short term as well. Question I have is, can it last in the long term? And to answer that, you got to look at the weekly chart. And right now you're overextended. Maybe we see a little bit more consolidation, but you got to have the Russell 2001 on the list. In my opinion, it's showing the most strength in the marketplace. And I think it has the maybe not the best trigger, the trigger above 3650 on the S&P, the trigger above 30,000 on the Dow. Those confirmation triggers are probably the strongest in the market. But right there at 1863, looking at that ultimately breakout of that 1863 or 1850 level, you do got strength in this area of the market. And then the area of the market that's been a little bit of a laggard over the course of this post-election market analysis that honestly we're going to be doing for the next 4 to 6 months. That's how it happens, right? When these things we're seeing, and I've been saying this for 3 weeks now, these things we're seeing, they don't remind me of the swing trading market things we saw in 2020. This seems more like traditional sector rotation, and I kind of felt like I was an island on that for the first couple of weeks. We're now starting to see other people getting involved with that true sector rotation as well. But the NASDAQ has been an underperformer here. It has been a laggard against the other market indexes, and it's the area of the market that has probably the most landmines right now. But just on one day, you are seeing a little bit of relative strength here today on the market recovery. You haven't broke out yet. This one's a difficult beast on the daily chart because you got some nasty wicks over here that coincide with the old resistance high at 12,500. And so you're ultimately saying, okay, yeah, I think everybody's willing to buy the breakout of the all-time high, right? Mm-hmm. But underneath that, are you willing to buy that breakout with tight resistance there? Are you willing to buy the breakout of today with tight resistance here? It's a difficult chart to get a very clean read on. And so the NASDAQ can fly. We all know that. It can fly, but I just don't like this area of the market from a technical perspective in the short term over, say, the Russell 2000 breakout of 1850 by 1863. The S&P breakout at 3650, the Dow Jones breakout at 30,000. Those are very clean charts, very clean confirmation. When you're looking at this on the NASDAQ, you're saying, yeah, this puppy can fly above 12,500, but underneath 12,500, you just got a ton of overhead resistance. There's a ton of chop when you're looking at the left of the chart. And so, even though you're looking at this area and saying this area is one of the strongest for a long time, when in an area of the market I want to bet on for the next 20 years, in the short term, we've seen it underperforming. And technically, it's got some challenging analysis, in my opinion.
Mm-hmm. Mark, as you're looking at this NASDAQ, obviously the rotation theme we've been talking about for a month has been a lot driven by virus news and everything that's been happening. Today, the Moderna news is not prompting those reopening stocks to go up and the NASDAQ to kind of hesitate. In fact, we're just seeing everything down and hesitating at resistance, like Matt did a great job breaking down the technicals here. Matt, give me Moderna for a second, because I want to get Mark's take on this. Go ahead, Mark.
Oh, no, I was just going to say, listen, if you're a smoker or like that first cigarette gives you a good buzz, right?
mRNA. Yeah, sure. Go ahead.
Fifth or sixth cigarette doesn't give you quite the buzz. I think that's what's happening with vaccine news, right?
What's Moderna symbol again?
mRNA.
I thought I put mRNA. There we go.
Now this one's been a juggernaut. And we obviously have had a bunch of news on this recently, even as recent as 2 weeks ago. We got some of the data from this trial, Matt, that they're talking about here today. This is a follow-up of that. And obviously the market is responding very, very well. They request emergency use authorization from the FDA for their coronavirus vaccine, like the 94.5% efficacy we talked about 2 weeks ago. They have confirmed that. Stock is up huge here for the year. Obviously, the market has been responding very well to this, and they're going to try to get 20 million doses of this vaccine out by the end of this year. Now, obviously, Matt, first vaccine doses, if they did get that out by the end of the year, that's within a month, they would probably go to healthcare workers, frontline workers.
Oh, frontline, yeah.
Those are always going to be the groups that are going to get them first. The public obviously is going to get more as the production gets ramped up. But guys, I got to tell you, there's two questions here. There's the market question. Does the market care? Obviously today it does not. But number two is there's also the human question. Like I even was this morning thinking, Man, the data here looks amazing. It feels like we're working towards a vaccine, and I might actually take this thing as soon as it's ready to the public, Matt. I'm going to have to obviously dig into that before I make that decision for my family and myself. But big news for humanity. Market doesn't seem to care as much here today. Mark, what's your read on this, first of all? Because we've had virus news every Monday for a month.
Excuse me. You have a term in the market, things are priced in. Sometimes that term is misused, like fiscal stimulus is priced in, or X events priced in, or whatever it is. I think the fact that we are going to have a vaccine is priced in. I really do. Now, does that mean that there can't be an algo-driven day sometime in the future? Like, I mean, imagine the day that vaccine starts to be distributed, right? That's an algo-driven market is up on that day. Value stocks are up on that day. Epicenter stocks are on that day. When you get that big distribution day, you know, Pfizer, Moderna, whoever it is, you know, you're going to have a big day on that, and that could start a little thing. But until that happens, I think the fact that we have a vaccine, I think it's priced into the market, and I think it's fully priced into the market.
Matt, what about you? Do you feel that as well? Do you think the market has gotten to the point where they're like, okay, individually, Moderna, we like this news. It could be great for the company. Within a couple of weeks to a month, they can start selling this in the US and actually turning some profit from all their research this year. But yet the S&P and the markets are all hesitating. You think the market has just priced all this in and it's kind of just more headline news here?
Well, you know how much I love the term priced in, but Mark is right. The market is forward thinking, right? And when you're talking about something being priced in, I think that's just code for saying, yeah, the market knows this, guys. The market's very familiar with this type of analysis. Does it have the ability to drive markets up and down in the future? Yeah, there's unknown variables there, but what is known is already known. It's embedded in price. And so that's where the price in philosophy comes from. But, you know, Tim, how long ago did I say, I believe the market has accepted that we're going to get a vaccine, and everything between now and then is news? It's just noise.
At least 6 months.
It was six. It was
May,
at least 6. Yeah,
yeah.
it was probably May-ish,
Yeah.
right? And nothing has changed since that time period. And so I you know, from a humanity perspective, I celebrate the Pfizer news 2.5 weeks ago. Moderna has had positive news. AstraZeneca has had positive news. This is positive news for the market. This is positive news for humanity. And it does look like we have a workable vaccine on multiple different levels, both for our government and frontline workers this year, and the general public next year. And so the news today coming out of Moderna with 20 million doses, it doesn't surprise me. I don't think it surprises the market. And I think it's just like, I can just tell you my reaction. I'm like, no, that's good.
Mm-hmm.
Right? I mean, it wasn't like, oh my goodness, let's hurry and go look at the market and see what the market's doing. No, I mean, guys, how many times have we talked about vaccines in the last 6 months?
Yeah.
I mean, this is nothing new to the market. So good for humanity, good for Moderna, good for Pfizer, good for, you know, Operation Warp Speed, good for that. I think historically we'll look back at this and be like, man, 2020 really sucked, but look at the amazing spirit of the American people coming together. And, you know, it typically takes 2 to 3 years to get a vaccine, and we had one in 8 months, right? Mm-hmm. I think you can look back at that and be like, man, you can celebrate a little bit. You can give the Trump administration a lot of credit for pushing Operation Warp Speed. You can give the pharmaceutical companies a tremendous amount of credit for, you know, pushing the research and development, and you can give the FDA credit for you know, pushing, you know, their typical comfort levels from, you know, and the confidence level in the public is growing. I saw some polls recently where, you know, a month ago there was less than 50% of the general public was willing to take a vaccine. They need that up to about 65 to 70% to actually have this be an effective vaccine. And the general public is getting a little bit more comfortable with that information as well. Myself personally, I'm not going to be the front of the line to take a vaccine, but my confidence is growing personally in the vaccine as this positive news. So, you know, I don't like the word priced in, but Mark is absolutely right. The market is forward thinking, and the market on the vaccine has been forward thinking for about 6 months. And all vaccine news is just giving people like you and I and other content media people, CNBC and whatnot, you know, things to talk about in that time frame. But mm-hmm. I honestly do not believe the vaccine news has been relevant news to the market in over 4 or 5 months.
Cody, I got a request for you, young man, if you can. Obviously, I mean, we don't have to make a decision on whether we're going to take this vaccine as humans today, but I think there's an interesting thought process out there about what do we need to look at. Can you look into this one specifically, the Moderna vaccine, over the next couple of days and kind of give us an idea of what it is you're looking at? And then maybe right now, kind of what process would you go through, Cody, in evaluating this? Would you wait for a couple weeks of this to come out, get reports from it? Do you go with the data you already have? Like, how do you even start that process?
So the main thing that I'm still waiting on, most of what we've heard about from storage capacities, the efficacy, is just the broader, large numbers that they're giving to the public and journalists and news media reporting them. All of that is very good. The fact that there's no extreme side effects, it's just the same side effects that you get from most vaccines, that's also really good. The fact that we're in the 90s for all three of these companies that are producing vaccine is also good. And the Moderna one being at 94%, or even the Pfizer one being at 95%, those are extremely effective. The smallpox vaccine that we used to eradicate smallpox was about 96 to 97%. So we're right there. So this is all really good news. So what I'm personally going to look at is these type of vaccines will be published with their raw data in scientific magazines. So like Science, like Cell, like those one-word magazines, and that's when we'll get the full, write-up paper, if not multiple papers throughout the process of what they discovered along the way. And that's when I'm going to dig into those and see if there's any red flags from a scientific level that stand out to me. If not, then I'm going full force with the vaccine myself, and I'm getting in line.
And they have to publish that data before they get an FDA approval, or do they just give that data to the FDA?
They have to give that data to the FDA. So it's not necessarily public to us yet, but there's no doubt in my mind that they're going to publish this, because it is historic that they were able to produce a vaccine from, the CDC getting the code from China in late January, early February, and actually knowing what to look for and how to test for it. And the first thing that we started doing was, first developing out the test so we can see how widespread it is. And then basically within 12 months, or less than 12 months, 10 months, being able to create a vaccine on multiple levels is an extremely impressive thing. And it goes to show that when you have proper funding for these type of things and you don't have as much government red tape sitting in the way, then we can get things done really quickly. So if all the data still checks out, then I think what it shows is how amazing the scientific community can work when it is properly funded and not, have this red tape in the way every single time. And with that, there's no doubt in my mind they're going to be publishing multiple papers, because this is historic. There's no vaccine that's been developed this rapidly by multiple companies ever.
Exciting news for humanity, no doubt about it. I think from a market perspective, markets have already kind of, and I know we hate the phrase, but they have already kind of started to price this in for future assumptions. Matt, you've been talking about it for 6 months. Let's move on if we can. Obviously, big news for humanity, but let's move into some more market stuff here as we go through our top-down analysis. And by the way, if you're out there watching our show right now, as always, hashtag Team Tackle. Appreciate you guys supporting our community here in the chat. Love the conversation that you guys have had the last couple of weeks as well. Let's keep that energy up, that positivity up, and we'll keep monitoring the chat for questions and whatnot. Matt, let's go through gold, crude, some of the commodities here first, the dollar, and then Bitcoin if we can. Let's move on to gold next. And obviously, just been a risk-off environment for gold here for a while now, and not really holding the 200 yet, Matt. That 1800 number was in play. What's your read on this thing technically?
No, you're still in the zone though. 1800 is that zone. And when you're talking about, major areas of support and resistance, I'm not going to call an overextended break with a downward movement in price, a confirmation that we could expect to see more downward movements in price. I think you're ranged down in that zone of 1800. Obviously, we're underneath that. I'm looking for a little bit of a slowing momentum, consolidation. But again, you're going to let this battle play out. It's not going to be a day. It might not even be a week. It's going to be some time. We're talking gold here. And so even though I'm still looking at that, 200-day moving average as a potential opportunity to add to positions or potentially, look to initiate a position, it's going to take some time to shake out. And we haven't had any analysis at this point that says this is the day. And so, I think you got to be a little patient. I don't think you're overreacting to any downward. If you're a gold owner, you're not overreacting to this. And if you are overreacting to the downward movements in price from 2000 down to 1800, nice little 10% drop in price in the last, 4 or 5 months, then you shouldn't own gold, quite frankly.
Yeah, I agree with that. If you're changing your analysis based on the recent price action, I think you've been approaching the product incorrectly based on what it's there for, to help you hedge against inflation and the concerns in the dollar. Marky, what are you doing?
Honestly though, Tim, remember this. Remember that blow off top and how bad I hated every aspect of every day during this blow off top, literally in the halftime report. Now we're down back to that level.
Mm-hmm.
So we'll see how it plays out, but no, I don't think anybody should react in the short term to gold. But I'll say that if gold goes down another 10%, I'll say the same damn thing.
Mm-hmm, mm-hmm. By the way, that period was when a lot of the newcomers in the market started getting excited about it. And now what? They're not talking about it.
Listen, if you believe in the gold argument, you're looking at dollar cost averaging on the downside. It's very simple.
Mm-hmm. Marky, what's your take on gold right now?
Janet Yellen has a Twitter account now, and she made her first tweet.
Wait a second. Hold on. Is this real?
It's a real thing.
Your girlfriend tweeted?
Oh, Janet, how I love your tweets. She got a Twitter account now, right? Listen, Janet Yellen. That's all I got to say.
I got to follow her.
Listen, technicals are a little bit ugly right now. I have a cost average down plan. I have exposure to gold, slipping a little bit. I'll add more at lower levels when I get the technical signals, formations I want. Janet Yellen has a Twitter account. You think she is going to tweet anything hawkish in the next 4 years?
She's following
do you think there will be a single hawkish tweet out of Janet Yellen?
I see exactly what just happened here. She got the job, Secretary of the Treasury, obviously penciled in there, Matt, and they told her, you have to open a Twitter account. She's only following 3 people, Kamala Harris, Joe Biden, and the Biden-Harris transition team. So,
you know what would have been great? Come on, Janet. Follow the Backstreet Boys.
Follow Team Tackle.
Follow Team Tackle. Come on, Janet. I'll serenade you every day. Come on, follow us.
Follow Trading Justice, Janet. I could finally try to convince Mark to actually send a tweet.
Dig, if you will, a picture. Come on, Janet. Come on.
Yeah. No, I'm with you, though. Obviously, we're going to expect soft monetary policy for the next 4 years from Janet Yellen. Obviously, she's been
maybe she could cure the problem she helped create.
I doubt it, bro.
Oh, I doubt that.
That's not how that's not how digging holes works.
What type of fantasy world are you in if that wasn't direct sarcasm?
Hold on. You guys felt that was some hope coming out of me? Was that your read on my comment? It was like, Matt's coming around to Janet Yellen. Like Matt's going to be open-minded about Janet Yellen and her philosophy around monetary theory. Yeah.
Yeah.
All right.
The hole she dug is already bigger, and she doesn't know where the dirt went because she's been gone for a couple of years. I don't think she can fill that one back.
Dude, how in the world can the woman who claimed that 5 years ago we were never going to see a recession again in her lifetime going to cure the fact that we're in one of the largest recessions in our lifetime?
No,
it's not going to happen. Not going to happen.
But
you know what is going to happen? Modern monetary theory. So yeah, own gold. Like literally, I'll put a picture up 2 individuals. Okay. Own gold.
Oh, Christine
Lagarde and Janet.
One of the most powerful women in the world, if you think about it.
Oh man, powerful women.
Yeah,
they'd be on the top 10 at this point.
They're definitely up there. Yeah. I mean, we're talking about this
Treasury Secretary of the United States, ECB president.
Yeah, they control our future. Let's call it what it is.
They're the 2 most powerful people. Well, Fed chair and president of the United States, but
yeah, they're up there though.
Yeah, they're up there.
Definitely up there.
No, and I'm not talking general. I'm just talking about the most important positions in our world right now.
Oh, let's be honest. Listen, unless it's involving war or something like that, but for our money, it's all central banks. Yeah. I mean, presidents, they're something very cute in today's society. Come and go. It is central banks. It is central banks. It is central banks. So
every time, every time you ask me about gold on the downside, my analysis is going to be the same. It's
be the
dollar
same.
cost averaging, and then I'm going to show a picture of Janet Yellen, and that's going to convince everybody to own gold.
Listen, I'm with you. And I think if anybody's out there and they're hearing that analysis for the first time, you got to think about the gold product different than you think about other trading products. But if you're Team Tackle, you already know exactly the way that we think about gold and the way we've been approaching it.
It's not a trading product.
Years and years. It's not a trading
It's not a trading product. It is an investing product.
Let's take a look at oil next here, Matt, if we can. OPEC is.
It can be a great day trading product. It's not a swing trading product.
Yeah, but even me, I choose not to day trade the futures in gold. There's
No,
other things I
there's
can
other
day trade
things.
when I want to day trade.
The reason I said that, Tim, I know there's some really good futures traders in
who
gold.
trade gold. Yeah, for certain. Take a peek at crude next if we can. Mark, obviously there's an OPEC meeting going on. They're trying to decide whether or not they're going to continue with that plan for January 1st to have that 1.9 million barrel a day increase. Looks like they're going to backtrack on that for about 3 months because of the lack of demand around crude oil for some time. There's a supply side argument happening right now with OPEC. The demand argument has been terrible for quite some time with COVID data on the increase, but crude oil breaking back to the upside, looking pretty good here over the last couple of weeks. Couple of red hesitation candles. Do you see anything in crude oil that's grabbing your attention, getting you interested?
Nope.
I tried. Okay, I got a question. I know you did. It was a good college effort there, buddy.
Yeah.
What would it take, Mark, for you to get interested in oil?
Economy reopening. I've had the same stance on crude oil. Like if you were to dip back down into the mid 30s, I'd buy some, like I do with almost any.
So that is literally your analysis. Then it's like if you get a dip into the mid 30s.
No, but it's the economy reopening. I won't do anything aggressive in crude oil until the economy reopens. I mean, it's just that simple. As long as you have threats of lockdowns, as long as you have COVID headlines. I mean, goodness, we set the record for most hospitalizations yesterday in the United States. I mean, COVID's getting worse. It's not getting better. And while there is something bright on the horizon, I got lots of other ways to play that. I'm not doing anything with crude oil.
Well, I don't know if I'll ever invest in oil again. I do not have a long-term bullish thesis on oil.
Mm-hmm.
But my interest is picked up recently in trading oil. And I know it's crazy in the last year, but we're starting to see some consistency in technicals here, guys. I mean, it's early, but what do we have? Take out the craziness here. A couple upward movements in price. 3-day bullish retracement coming into the rising 9, kisses off, hesitating at resistance, breakout, price appreciation gets overextended, slowing momentum candle, downward movement in price. When's the last time you guys saw some consistency in analysis from a technical perspective on oil?
It's the most constructive the chart's been in a long time.
Well, at least since this early recovery stage.
Sure.
Right. I mean, there was some consistency, not here, but there was some consistency in this late charge here.
Yeah.
This is more consistent technically than this snapback V-shaped recovery was.
Mm-hmm.
This is more constructive than this was technically, in my opinion. And so even though I doubt I will ever invest in crude again, I will trade crude again. Like, crude's a wonderful tradable asset or tradable instrument when you get trending conditions. This is an instrument that can absolutely fly up or down.
Mm-hmm.
So I'm getting more interested in it to the point, guys, if you get a bullish retracement down to the 44 handle, maybe even 43, I think that could be considered tradable.
Yeah, I agree. I would not fault anybody from doing it. And I myself would pass. And
I would have, well,
and my bias, but yeah, go ahead.
Okay. Let me paint you a picture. 2 more days down.
Let me paint you a picture of you and I engaged in the
Let me paint you a picture. Okay. Let me paint you a picture. 2 more days down, consolidation between 43 and 44, upward movement in price. That's a standard bullish retracement coming into a very important old resistance new support level. That absolutely could be traded. Now, whether we have the confidence to trade it because of crude history in the last 7 months, that's a different story. But technically, I'm starting to see an oil condition that's a little bit more constructive than it was in recent history.
Mm-hmm.
And yeah, like this breakout here of the 43 handle and the 42 breakout there, yeah, those are missed by a lot of traders, myself and a lot of people at Tackle, because that's the first breakout of this long-term consolidation range. But you got to call that a breakout. You have to call that a breakout. And now you're coming back in to test that same old resistance right there between 33 and 34, which coincides with the old resistance and support. I'm sorry, it looks constructive, guys. If this was a different tradable instrument, we would have a different read on it right now.
Mm-hmm. And I do believe there's at least upside to 50, which doesn't seem like a lot, Matt, but we're talking about 8-10%, depending on where you get the pullback to. So, there's enough room in here for a little quick hitter, I think. But even that, I still need more development. I still
44 to 50 is not a quick hitter. 44 to 50 is a freaking home run. That's not a quick hitter. That is 6 points against a 44-point instrument in the futures market. That thing you tell stories about down the road. So a quick hitter is like, yeah, let's snap back rally to 46. I mean, the 10% price appreciation on crude is not like.
Hey,
that's a big trade.
Let me do your transition for you, Tim. Yeah, that's what Bitcoin calls a good 15-minute block.
Yeah.
If you are looking for volatility, you can get it. You can definitely get it in Bitcoin. I'm with you. And obviously, we've had quite a bit here the last few days, Matt, as we're working through this chart. This has been something we've been all over. This is the first development from a chart perspective we've had in several weeks that would warrant us
the lead today, boys.
What's your read here on Bitcoin, Matt?
The bloodbath on Thursday was fascinating. A little Thanksgiving massacre here on Bitcoin. And yet, shockingly, that Thanksgiving massacre only saw decreasing price action since we didn't see that low of Bitcoin prices since literally a week and a half ago. It was amazing. But it got gobbled up. It got gobbled up, and it got gobbled up fast. And quite frankly, that should be a warning sign against anybody trying to short Bitcoin. That thing got gobbled up so fast. Mark, think about it like this real quick.
No, it's
real
crazy.
Quick, Mark, real quick. This happened on a day where none of us were focusing on the market.
Mm-mm.
Correct?
Nobody cared.
Nobody cared.
Holiday.
There was no volume on it. There was volume on it, but there was not supporting. Nobody was aware of it unless you were on Twitter.
I don't know if I told you
it
guys
was gobbled
this.
up, guys.
I was at dinner with Mom for Thanksgiving, and we were at Ed's table, and Ed's son was like, yeah, Bitcoin crashed today. And we're there at Thanksgiving dinner, and I'm like, I gotta check my phone real quick. I apologize, y'all.
Mark's very heavy.
I'm eating Thanksgiving dinner, and I'm like, oh, wow. And I was just like, and I couldn't wait for Friday to sell some more naked puts on some of my miners, because I was like, oh, I'm gonna get a better price, So.
And he did get that better price. But what was fascinating again is it got gobbled up very, very, very aggressively. And you obviously had some positive news coming out over the last 24 hours on GBTC. Mark, I'll get your take on that. Technically, though, I do think it led to a little bit of a challenging environment, because a lot of this price action happened between Thursday and today, when hardly nobody is really paying attention to these things.
Mm-hmm.
And so it's I don't think it changes the underlying analysis that I had from last week, that we're range up, we're overextended, expect a battle at 20K, wait for the potential breakout of that 19,500 by 20K. And so even though it's a very, very volatile last few days, and it's crazy volatile, I don't think it changes the analysis from last week, quite frankly. When I went into the detail on Wednesday, potential average yield, we were range up from a price perspective. We were range up from a time perspective. We were approaching major resistance levels, and you got to expect battles to happen at those major resistance levels. The battle occurred, the bears lost, that's fine. Let's still get ready for a potential breakout. And, like I said last week, and Frank kind of made fun of me last week, I said, give me a few more days of consolidation. Give me a week of consolidation. Give me 2 weeks of consolidation. I don't care how long it takes. Give me a good, clean trigger above 20,000. And Frank made the joke, you might not get it. Bitcoin doesn't care what you want. And Frank's right. But again, I don't think anything that happened in the last 4 days changes the analysis. You're still looking at this as an overextended pattern. give it some time to consolidate, give us a clean trigger above that 20K, let it confirm above 20K. And you know what, Jake Lamore, our resident, all things crypto and Bitcoin expert, is coming on the halftime report this Wednesday. I just did confirm it. He's going to come on this Wednesday and going to give his take on all things crypto on Wednesday. And we'll certainly do a deep dive on the crypto markets and specifically, obviously, on Bitcoin on Wednesday of this week. But, I'll just tell you what he sent in the text. He says, don't really care what's been happening in the last few days, but if it does break that all-time high, expect it to fly. I agree with Jake. So I'm excited to get his take on Wednesday.
Well, and I do want to get your read on price action on that regard, Matt. And then I want to have Mark break down the news. There's a couple of different news items, one around GBTC, obviously, that is affecting Bitcoin bulls, and some good news for that. We've had good news for a couple months around that, including the PayPal news recently. But institutions we know are getting involved. But people who are newer to Bitcoin, number one, Matt, like a Jake, veterans, we all know this. This is not uncommon in Bitcoin.
No,
you're going to have, like, if you're brand new to this product and you're like, whoa, look at the candle or look at the volatility. This is a volatile product to begin with.
Kidding me? 15% down. Your heartbeat should not get higher on 15% down on Bitcoin.
I'm a long-term Bitcoin investor. I could not have I probably spent less than 5 minutes thinking about it the last 4 days.
Listen, Bitcoin has multiple times of 70% down.
Yeah.
15% down. God, Bitcoin holders for the last 5 years are like, good job, newbies.
Mm-hmm.
Good job capitulating, newbies.
Well, and think about that, Matt. We just ran from $12,000 on the breakout to 20K here. We had the price come down about 15%, and then the bulls came in and slapped it right back up to 20K. You got to be equally as impressed with the bullish response as
Tell me this.
Concerned
if you're
about
a bear on
Bitcoin.
Response. I haven't really met bears, like literal bear Bitcoin bears. Have you guys met?
There were some at the start.
There used to be, yeah, but no.
No. Okay, hold on. I'm not talking about people that hate Bitcoin. I'm talking about true bears, the convicted bears. That this is a I would say.
Who's short?
I'm talking
Bitcoin?
I'm not talking about the lack of belief. I'm not talking the lack of believers. I'm talking the people with conviction that actually short Bitcoin. And for those individuals, if you're looking at the last 2 days, are you going to short again?
I can't imagine why.
Could you imagine?
Could
you imagine the conviction it would take? You would have to be literally like, what's the guy's name in The Big Short? The hedge fund guy.
Yeah.
What's his name? I forget his name. The actor's obviously Christian Bale, but you would have to be Christian Bale in The Big Short, his level of conviction, shorting subprime and taking on the risk of your entire world collapsing, that level of conviction. And if you're that individual, the last 3 days has been like, I can't win.
Yeah.
You're looking elsewhere here. And so I honestly, I think the price action, although it's volatile, crazy, and it's very, very difficult to read, if you were looking at this as any potential short saying coming down, you're not looking at that any longer. You shouldn't have been looking at it in the first place in the face of this momentum. But if you were, man, get out of the way. This thing wants to run.
Michael Burry, I think is his
Michael Burry. That's right.
Michael Burry.
Man, that's a great show. I need to watch that movie again.
It's a fantastic movie.
I haven't seen it since its released a few years ago.
By the way, the little sequence they have where they do like the actors explaining so much of what the process
I thought it was beautiful.
Shorting was such a good way to describe it. I thought it was wonderful. Yeah. Absolutely.
Well, try to explain, Tim, and you and I have done this a few times because we've been around the market, especially back in the subprime era. Try explaining to average American people the subprime meltdown.
Right.
It will blow their mind. And so I actually felt they did a really good job describing kind of the what was going on in those little 15 to 20 second person to person type conversations that movie was having. Mm-hmm. The only problem I have with The Big Short, and the only problem is it showed one hedge fund when there were many hedge funds doing it. They represented $1 billion problem when it was truly $1 trillion problem.
Mm-hmm, mm-hmm. Mark, there was also some news items around Bitcoin here recently, one including GBTC. Can you just kind of give us that news, what it is you picked up on?
The big thing, and this is something we've been talking about here on the halftime report, and seriously, not to toot our own horn, But we are ahead of what you see out there so often. And I mean, if you look at 2020 and how we've been front running news and analysis, I mean, tell your friends.
Mark, because we don't report news, we analyze the markets.
Yeah, I mean, this goes back to COVID, before COVID hit, when we were telling people about it. It's been a stellar year for our calls. And one of the things we've been talking about for 6-7 weeks now has been the institutional flow into Bitcoin. It's real, it's genuine, it's there. Institutions have embraced this product. That's one of the reasons that I've become like, hey, listen, if as long as it's not a bunch of Tim and retail traders and Bitcoin enthusiasts, if I got institutions on my side as well, it's going to catch my interest. The most recent one was Guggenheim, Scott Menard.
Well respected, by the way, Guggenheim.
Well respected, well quoted, well-known individual in the investing community. And his $5.3 billion macro opportunities fund now has the green light to invest up to 10% of its assets into Grayscale Bitcoin Trust, GBTC. So once again, 10% of the fund, that's $500 million. They're saying, yeah, you can invest this into GBTC.
Guys, I don't want to put that on the equivalent of Larry Fink putting 10% of his fund into ESG movement in January. But what have we seen to those stocks in ESG this year?
Mm-hmm.
They've flown. They've done great.
They definitely have the street sentiment behind them, and I think that will be in place for a long time. And when a Larry Fink, I think what that really does, Matt, when you hear like a Scott Menard talking about Bitcoin, obviously it's not on the same level as a Larry Fink. Larry Fink's one.
No, it's not on the same level, but it's the same type of analysis.
When a respected Wall Street professional starts splashing news about getting involved in a product, I think it's a big thing. Yeah, obviously it's a big thing. And the fact that they can actually get access to the GBTC, a Bitcoin ETF is something we absolutely need in this market. There's no question.
Oh my goodness.
Talking about it for years.
What are we doing? Get a legit one. Yeah. It's time. This is so dumb. It should have been approved 5 years ago. I don't know what the SEC is doing outside of just shenanigans, and more shenanigans. So no, GBTC, honestly, guys, I'm not wrong on USO and UNG, but I could be wrong on GBTC.
Mm-hmm.
Like I've long held it's not a viable instrument for Bitcoin, and I could be wrong there.
Now, do I have to sell a naked put on USO now?
Listen, can't you just accept one moment when I say you're right and I'm wrong? Can't you just accept it one time in your, like, how old are you now? 49?
Almost 50.
You'll be 50 in a month. So you're fine. In your 49 years of your existence, give me one time where you just accept it telling you you're right and I'm wrong without making me feel too terrible about it.
No,
but you're right, Mark.
Listen, that's the old Mark when he invested in oil and stuff. Man, I'm now all about like.
Oh, you're the 22-year-old.
And oh my goodness, I don't even recognize. I got the mess I got
Mark,
on my 100 right now.
That's my bad. I did not recognize the personality you were working under today.
Yeah, so
I should have recognized that. I didn't. You're the 22-year-old. You're millennial Mark today.
I don't know what 22% of the companies on my 100 even do anymore.
It's just Grayscale Bitcoin and Riot.
It's like yeah. I mean, I don't know. I got this candy something that's down 23% today. I don't know what they do. Something with electronic vehicles.
I have never had a desire to see Mark's top 100 more than right now.
Oh, it's a mess. Like, oh, listen, if you're like these dividend, oh my gosh, I think I got like two dividend pairs.
We have to have a podcast where we break down your 100 and really psychologically analyze who you are as an individual.
Beyond Meat, Kodak, Space, like Match.com, F-Tech, I don't know what they do. Palantir, they make me money. That's the only thing I know they do. IDEX, they do something. I don't know.
Mark may be the best passive investor of all time.
Like Tilray, I got them on there these days. Newtnex, they do something. I sold a naked put on them.
All I'm saying, Mark, this is great podcast content. us breaking down your top 100 and me and Tim questioning the psychological nature of who
agree.
you are.
I agree. It would be fantastic. I would love to.
Mark is hating this idea right now.
I just like Genius Brands is still on there. Yo, for the win.
I think it's just there because you like the name Genius, and when you look at it, you're like,
no, I can get every once in a while. I can get $10 for a $1 naked put, and I like doing that. You know. Oh,
I can respect that. All right, so Mark, obviously you've been all over this GBTC riot. I mean, you've been all over it. The news from Guggenheimer today, does that give you greater confidence in this?
Yeah, but 1 second. Do you see my screen?
I don't know if I want to. McRibs are back Monday. That's so sad that you took a picture of that.
I did. No, yes, it does every time. And this is the thing is like, I have a rule like that I do. I don't know if it's more of a rule than an impulse, just decision that like every time I see an institution come out and say they're doing something with Bitcoin, I add more exposure. I sell more naked puts on miners because it does. I'm like, if they're doing it, it's just, and it's like, listen, it's been a great run.
Mark, when I lost my mind on US Steel many years ago, US Steel became something more important to me than I wanted it to be at the time. But just because I was just aggressively pursuing it became too important to my portfolio. And I say this seriously. Do you think how you approach certain instruments to the top side impacts your portfolio design? Because you may have too many aggressive financial instruments right now.
No, I do, and I try to, and I try to, because portfolio design is critical. I mean, because it's all fun and games till you get smacked in the face.
It's all fun and games when it's going up.
And so like you can like have all of this junk in there, and I use the term loosely, but and portfolio design, because in all seriousness, I got exposure to finance like American Express. I like Jack in the Box right now. I have like naked puts on the broad markets. So it's fun to have spec plays. I like spec plays.
Yeah,
but spec plays, and I really do when I say this, NEO, it's a spec play. It's an electric vehicle spec play, but these are spec plays. If your entire portfolio is made up of spec plays, then you're going to have a really volatile portfolio. And if you're new to trading and new to investing and new to managing your own money, and you have too many spec plays and the market, because those are the things that when market gets spooked, pull up Candy right now. I mean, a good example of this, KNDI. Like these things are wild childs, absolute wild childs. Where, it was a couple days ago, it's at 17. Today it's down to 10. I mean, that's really volatile and really crazy. And, it's not for the faint of heart, and realize that it's not real investing. It can be real trading, right? Because we can trade a lot of things. And you can have different spec bets because you like the company, but realize that when these spec plays turn south, it can be really violent in how they turn south. I mean, pull up our favorite Nikola, NKLA. This is the segment when spec plays go wrong.
Yeah, they also had news here today as well on Nikola, but you're right though, it's down like 25% after that.
GM pulling out their equity.
Yeah,
that's
not
big news though. That's big news. They don't want equity.
Yeah. In fact, why don't we talk about this one for a little bit here, Mark, because it's an example of that speculation. Nikola's been under fire for months. We talked about it on the halftime show in September. Their CEO had to resign in September under some sharp allegations about his conduct. There was all this fanfare about back and forth with the GM deal.
Hold on. What conduct?
That he sexual misconduct with underage girls.
Okay. Teenagers.
Okay.
Just want to make sure that conduct was stated.
Yeah. Yeah. And obviously the market turned sour on Nikola. I did as well. Personally, I won't play this stock for a lot of different reasons, but it did start to make a little bit of a comeback there recently, Mark. And what did I say during the halftime report, even just last week? Like, this is not the same as NIO and Tesla in the EV movement, guys. There's news around this stock that you still got to consider. It came out today that GM did announce a reworked, smaller agreement from the partnership they announced in September. So, and they're also going to nix the plans for building their electric pickup truck, Matt. So production problems and a deal that we knew had issues on his face that now seems to be not completely falling through, but not necessarily what Nikola was expecting when they struck the deal in September, and it's down like 25%. And so, Mark, you were bringing this one up as an example of that speculation, what can happen when you get smacked in the face. And obviously Nikola's getting smacked down here today pretty hard.
No, and so it's like, listen, like, and there's nothing wrong, but I've like, you know, I have this person not part of the tackle trading community, and she showed me her portfolio, and it literally was like 99% spec plays, like this and that, and it's like, huh, and I get it. It's where like price action can happen really fast, and things can go up and down, and it makes it feel like it's this like really vibrant thing, but like it's just,
in general, in short, you want some boring cash flow plays in a portfolio. But you know, like, where did you even find this stock? Like, I could care less. Nikola here, you make a great point though, Mark and Tim. These spec plays, they feel good in the time, but remember, a company before the pandemic that nobody was talking about, still after the pandemic, has zero revenue. Mm-hmm. And GM is modifying a deal that was the only really good thing moving forward for Nikola. Mm-hmm. So obviously I'm out there too, but Mark, I guess the thing I see a lot in these spec plays is that a lot of these were companies nobody even knew about 6 months ago. Like, nobody had even heard of these companies because they're OTC companies, they're pink slip companies, they're penny stock companies. Guys, a penny stock before the pandemic is 99.99% a penny stock after the pandemic. And I just want everybody to understand that.
Well, and it's the bubble. Like one of the things that, because we talk about the bubble, and I will debate anyone, I believe we are in a world-class, epic, historic bubble. And one of the things about bubble is Apple's still a great company, right? But Apple in a bubble just has a really high PE ratio. Still a great company, maybe a little overvalued. If the whole thing came crashing down, Apple would slip a little bit, but is a great company and eventually would recover. The spec nonsense in a bubble, if this bubble ever bursts, I mean, it's just going to dirt. And so, like, having limited exposure to spec companies is just really important, because eventually the bubble is going to ease out. I mean, one of the things about 2020 that has created a false illusion for new traders is that everything goes up. And I'm not just talking the market, because yes, the market in 5 years is likely going to be much higher, 10 years, 20 years. But in 2020, everything goes up. And that's an illusion. Eventually, you are going to return to normal trading conditions where bears actually can trade to the downside because everything isn't being lifted up and everything isn't crazy. Eventually, there are going to be long-term bearish patterns again on companies. That's the normalcy. 2020 is the aberration. Eventually, that froth is going to even out, and you just don't want to be holding a bunch of junk when it happens.
Sure, and we did start the conversation.
And there is a ton of junk that has risen solely because other factors or aspects in the market have risen. Mm-hmm. Yeah. You take your Candy Technology. That company is a penny stock. Nobody should invest in that company. I'm not even going to bring up the symbol because it shouldn't be invested in. But you can trade it. But don't turn trade into an investment, because a lot of this junk, and it is junk out there, OTC, pink slip, just garbage. A lot of this junk just rises because the market rises. But after the scenarios that have driven the market in 2020 are played out post-vaccine, and we start talking about a world that's coming back to normal, a lot of that junk that rose to the top is going to get crushed.
It's going to get crushed.
And I, for one, look forward to shorting those terrible companies that made a ton of money on the backs of the companies like Apple and Google. So I look forward to that day, but that day is not today. So let's move on.
Mm-hmm. By the way, Apple did catch an upgrade here today. The chart's looking pretty interesting there, Matt.
We talked about, and Apple's not a NASDAQ play, S&P play. Apple's an everything play. Agreed?
Mm-hmm.
Yep.
I mean, it literally is everywhere. Although I do want to play the game on the podcast, Mark, where we draft the Dow 30 like a fantasy football.
Why don't we do that today?
Draft. Let's do it. All right. In the podcast today, the game in the podcast today, we are going to fantasy draft the Dow 30. We're going to go 10 rounds. The three of us get one pick. We'll draw to see who gets the first pick.
All right,
and we're going to see who can build the best well-rounded portfolio in a snake draft on the Dow 30.
Now, do you want me to put a qualifier on, like the winner is like best performance by the end of the year?
Okay.
Or the end of
draft
the next
in first
quarter?
season, right? This isn't a dynasty draft. This is a draft. 1 year, 2021. That's what you're drafting for.
We're drafting for 2021.
We're in preseason. Right. We're drafting.
I
like it. I like that. That's a good game.
That takes us into kind of until we get a vaccine, and then I like that.
I like the analysis because because the coach, because Noah will be on there too, so I'll have the three of you do it, and because that will give us why do you like this company in 2021? I think there might be some investing.
You guys might not have caught this, but Mark doesn't want to participate in the fantasy draft because of what happened to his fantasy football team this year. He doesn't want to have that conversation, so we'll move on. But I love it, Mark. I like
it. That's a good game.
This is fun. This is gonna be fun.
That's a good game.
All right, and I will put out the final fantasy draft on Twitter under my Twitter account, MattJustice13. We'll also go through the final draft tomorrow during the halftime show, and Team Tackle is going to judge who they thought built the better portfolio for 2021. Oh, we're going to have some fun doing this.
And we'll go ahead. In fact, I'll stop by the halftime show tomorrow towards the end of it, and we'll review it. So yeah.
Bro,
plus, Noah's tomorrow too on the halftime report. So
we'll
be here too.
Noah.
I love it. I love it.
Tuesdays with Noah.
Tuesdays
Apple's a first round pick, right?
Apple's
just whether you take him first.
Apple's a first round pick.
Well, there's only 3 picks in the first round.
Is LeBron James a Hall of Famer?
Apple's a first round pick.
Okay. So, Apple's a first round pick.
I don't know if they'll go first though.
Oh, Tim, you can't do this. It's Apple. What you're doing?
You got Microsoft, bro.
Okay, hold on. I just want everybody to understand what Tim just did. This is what he does in fantasy football as well. It drives me nuts. He acts like he picks out he'll call Patrick Mahomes I don't know about Patrick Mahomes. Tim, everybody knows about Patrick Mahomes. What are you doing?
I heard he's pretty good. He's pretty good, right?
All I know, Tim, you are so terrible at podcast games that I'm shorting your basket of stocks.
Okay. So. Hey, you do it,
bro.
Oh,
bring it. It's on.
You bring that.
It's on.
We'll have some fun with that on the podcast here in a few minutes.
But specifically Apple, right? Specifically Apple here. Obviously caught an upgrade here today. Got a higher level of support threatening that potential breakout. You do have, left to the chart, but that's always going to be the case when you're dealing with underperformers in the marketplace. I'm kind of interested in Apple above 120.5, guys. Somebody talk me out of it. I like it. And here's why I like it. Number one, relative performance on a down day in the market. This is a no sell day on Apple, right? Got a higher level of support coming into a potential breakout. Yeah, you got chopped to the left of the chart. You got to be concerned with. I'm not that concerned with it, to be honest with you. I like the breakout here. What do you guys think?
Only if the broad market breaks out, then yes.
But the broad market's down today. Apple's up.
Yeah, but that's a specific upgrade news today.
I don't think you need the broad market to break out to play this one. Look at the weekly chart.
Oh, and see, Mark hates that, but
I hate that.
I don't think you need.
I think you absolutely need the broad market to break out. Listen, you had algo-driven upgrade headline today. That's the only reason.
Okay, let me put it a different way then. Yeah, I don't. It's not that I disagree, Mark. But if Apple breaks out, why would the market break down? Why couldn't Apple be the leader there?
Apple is such a big part of those indexes that
We're not talking candy, bro.
we're
talking Apple.
Yeah, listen, I'm not playing Apple unless it breaks out.
You have a new iPhone.
I like it.
Season in a new super cycle type event going into next year, where it's been underperforming for the month of November and October.
Dude, we were talking about this.
Waiting for
Santa Claus was the first person to get the vaccine, bro.
Can I just go first and pick Apple?
We're drawing that. We're drawing that. I like this weekly chart, guys. I think it's constructive. You got rising support levels, horizontal resistance levels. You discount some of the volatility.
I mean, pull up Facebook's chart as well. The weekly charts on tech are very constructive.
But give me Facebook or Apple. It takes me a split second to say
it's Apple. The momentum change on Facebook's not great.
Yeah, you got a double top scenario.
Yeah, but that rising 20 that's been holding on tech.
Sure.
No, you're right there. You're right there. Right.
We're it's catching up. We're due for a lift in tech.
All right.
Based on the technicals alone.
Team Tackle, we got a disagreement amongst the crew here. You guys break the tiebreaker. Apple above 120, position style through Christmas, based on the weekly chart strength. Yes or no?
No, the only disagreement we have is if the broad market breaks out. Can you play it if the broad market breaks out?
You can play it if the broad market doesn't sell.
I mean, look at Tesla lately, guys. Tesla broke out and round.
Oh,
that is break out.
Listen, Tesla and Apple.
Why can't Apple
Tim,
operate
it's different. It is
because Tesla isn't part of the S&P 500 because Apple represents a huge, massive.
Wait a second. Does Elon run Apple?
Elon does not. No,
then it's different. Okay, but I do see your point here, though, T. I mean, when you're looking at the market in the last, if you're looking at the market in the last few days, right, or the last couple weeks, and you're seeing the market a little bit of consolidation, you got a bullish lean, upward movements in price, moving averages, upward movements, but you've done a little bit of consolidating here in the S&P over the course of the last week and a half. You see that consolidation range there. When you're looking at Apple, you see that consolidation very similar to that in the last week and a half or so. When you're looking at Tesla, you're looking at breakout and absolutely just fly. The market and Apple they're much more closely aligned than Tesla and the market is, no doubt about that. Mark's absolutely right. However, to Tim's point, when you're looking at this on that weekly chart here, once you cleared out of that resistance channel, there was nothing above that level. And because there was nothing above that level, there was nothing there to stop that type of price appreciation. So I do not expect a blow off top here above 120.5 like you did on Tesla, because you do have 130 to contend with. But I do think 130 will be kissed, which means it's going to be a good trade. So I don't expect, let me put it like this. I don't expect to blow off top like Tesla. But if it does break out of that 120.5, it can absolutely run to 130 without the market support.
It's got an interesting pattern. I think it's got to be on everybody's watch list in short term.
I'm not on YouTube. What Team Tap would come in as?
So basically, we've got a Apple, yes, Apple, yes, hell yes, absolutely. Their 5G sales are going to be astronomical. I don't know.
It's Apple.
Give me some PBCC.
Is there anything? Okay, let me put it like this. Is there any company people love trading to the top side? Like everybody just loves it. Like, I don't think everybody loves Tesla breaking out. I think a lot of people question it. I think a lot of people think it's crazy. I think a lot of people hate it because of it makes Elon more money. But I don't think anybody sees Apple breaking out like, oh, I hate this. Like, it's Apple. Everybody likes Apple.
People love buying Apple. AMD, maybe. AMD broke out, by the way.
Oh, AMD. Yes. Yeah. Thank you for breaking. Very similar analysis here to what was happening on Apple. Underperforming, breakout. Look what happens on the breakout. Boom, it flies. And just as a subtle reminder to everybody, I told, Tyler and I talked about this specifically for the report this weekend at Tackle Trading. And there was a lot of questions on whether or not to put AMD on the options report this week. I said to Tyler, we do not miss breakouts on AMD. Tyler's, you're damn right. We do not miss breakouts on AMD. AMD broke out. Love it.
By the way, it is the very first stock that he analyzes on that option report this weekend. I just dropped the link in the chat, and you were right. We were in that meeting on Wednesday, Matt, doing the prep, and you're like, we don't miss AMD breakouts. And here we are on a Monday. It is now breaking out and running. And obviously, we're going to track Apple. We'll pay attention to.
But again, coming back to Apple very quickly, right? AMD breaks out. Where does it go? It finds that next resistance level, right? And then what does it do at that next resistance level? What does it do? It consolidates at that next resistance level. So AMD, I'm calling this a breakout on AMD. I think 100 is absolutely in play here. And then obviously we'll talk about the breakout of $100. Like there will not be a stock I talk about more than a potential breakout of $100 on AMD if we high base there.
If you have a high base at
if I get I'm going to tell you right now, if we get a high base on AMD at $100, there will not be another stock I talk about until it breaks out.
Matt's already getting excited.
Like I can't even think about it. Like let me paint you a picture for a second, bro. No, I can't. The picture looks good though. Overextended, coming into $100, significant level, form a little bit of a base, coming into resistance, clean trigger above 100. Oh man, there's not a sexier potential trigger 2-3 weeks from now than AMD above $100. But we're a little premature there. But coming to Apple here, very similar, underperforming the market, a little bit of consolidation, strength coming in from a support level, breakout of 120.5. I think it's an easy trade actually.
I like it.
Now with market support, it could be a gangbuster, but right now, I like it.
With
market breaks out, I love it.
Sure, could be big deal. Yeah, no doubt about it. We still got to do a couple of things here before we wrap this show, about 10 minutes or so. Matt, I did want to take a quick peek at sectors if we can. I don't think we have in-depth analysis on every sector we need, but if you see anything major in the sectors that you wanted to break down, we basically upgraded a lot of stuff like 5 yards, Matt. Yeah. We kept some stuff the same. People can review the full newsletter for in-depth analysis from Marquise. I did want to talk China, and there's a couple of stocks in the news that I wanted to get to. Why don't we start with sectors if we can here, Matt? Just give me a quick flash on anything that you find interesting in the sectors. I didn't see major stuff developing here. Markets are moving on a Monday kind of in a broad-based fashion. But what did you see in the sectors?
Tim, we had a great conversation on Wednesday, and then we basically updated on Friday, but we had a great conversation amongst the coaches about how to properly rank the S&P and the strength in the S&P. And even though we're all bullish in the market, it's a degree of ranges, right? I believe the most bullish coach was in that +2 territory, and I think the least bullish was in that +40 territory. So we had that a little bit of a mix, some a little bit more conservative, some a little bit more aggressive, but that's kind of what I like to see in analysis. And from the S&P perspective, I think at the end of the day, price went up, support held, and we were threatening a breakout. And so we didn't want to do anything too aggressive, but we wanted to respect the strength in the market last week, the defensive nature, on that support bounce at 3,600. And, so we did a 5-point upgrade in the S&P 500, and, basic materials, industrials, communication, finance, discretionary, they all had that very similar type 5-point upgrade. You're looking at communications, was breaking out last week, consolidating above that breakout channel. You gotta like looking at communications right now. And obviously when you look at communications, the first stock that I think about is that potential Google play above 1,800 here. And so if you're looking at communications and you're saying, okay, I like the breakout last week in communications, I like the consolidation above 65 after the breakout in communications, I like the relative strength in communications today. Not as much as technology, but those are very similar type areas of the marketplace. So in terms of that, you got to be looking at that 1,800, breakout on Google. So with the confirmation last week, we felt like the 5-point upgrade was warranted. If we would have saw a little bit more strength following the breakout, maybe that 10-point upgrade would have got it in, in the industrial base material type rankings, but it did just consolidate. So keep an eye on communications, keep an eye on Google above 1800. The two highest rated sectors that we have right now both fit the market theme that's been developing, the economy opening up theme, the, vaccine theme, things getting back to normal theme, perhaps. And I know I am officially on an island when it comes to infrastructure at this point, but I still believe, and I've had that belief for 5 years. So maybe at some point by 2026, I will be right that our government cares about the U.S. infrastructure. But, the market's behaving like, materials is one of those leaders. And so materials breaking out of that consolidation last week, threatening additional breakout of 72 with the strength in the chemical space, with the strength in the copper space in materials. Even though gold has been a little bit of an underperforming in this area of the market, the strength in those other areas has overwhelmed gold in basic materials, and the breakout of 72 has to be gobbled up, in my opinion. So keep an eye on basic materials above 72. Industrials, the Dow Jones industrials, but the industrial index itself, very similar. One of the best performing sectors post-election analysis, obviously up a whopping, from 75 all the way to 90, a little 15-point run there. Quite a dramatic move in a very, very, very short time frame. You're seeing a little bit of slowing momentum here. Officially, though, we did break out, and now we're testing that snapback retracement that Cody likes. Let's see if it can confirm here. It is ranked at that positive 20 level. Obviously, we want to see this. This goes without saying, but I'm going to say it anyways. When you're dealing with these types of patterns here, this is a little concerning if we don't hold the 87.5 level. This is that first retest of the momentum 9, snap back against the old resistance breakout. If that fails, that officially becomes a fake out from a technical perspective. That would take some time to recover. Whereas if we doji here, upward movement in price, a lot of those stocks we're looking at in the industrial sector will also hold its technical patterns as well. So keep an eye on this 9 EMA. Keep an eye on how it's going to perform around 87.5. Let's see if we can get a doji here, upward movement in price. There's going to be some trades coming into Wednesday and Thursday of this week in this space, but let's see it first. We're seeing the test now. Let's see how it performs tomorrow there at that momentum 9 EMA. One of the sectors that's had, and again, I'll leave the marquees in the newsletter do most of the analysis here, but one of the sectors that has been astonishingly good and shockingly good is energy here. Mm-hmm. And we were talking and there's believers in our internal coaches, guys. There are believers in this space and there are non-believers in this space. It is one of those things where you either have an opinion or it's like, no, I really care less, So, but I will tell you this, from a trading perspective, every coach said the same thing. Any retracement has to be looked at, has to be considered. And that's what you're seeing right now in energy. You're seeing a traditional bullish retracement with increasing momentum to the downside. You see this upward movement in price, you break out, you overextend yourself into that $40 level, you slow your momentum, downward movement in price. Marty hit its head on the ceiling, now he's coming down. Now he's hitting the trap. He's hitting that support level. And the first support level, this energy is going to test is that rising 9 EMA. If it cannot handle that, then we got to talk about 36, right there where that 200-day moving average is. So when you're looking at this from a trading perspective, you're saying, I want to see that 9 and I want to see some slowing momentum between the 9 and that 200-day moving average, which is right there in the 37.5 by 36 range. So let's see how this retracement handles that, because we could have some very good trading setups coming into the very near future in energy if this retracement is gobbled up. We have not seen that evidence yet. Let's not be the first ones in. Let's not be premature here. Let's see the evidence of the buyers coming back in as support. But this is an area of the space. This is an area in the market where I would be looking a little bit more actively in these bullish retracements with confirmation. And I cannot say that clearer. You have to have confirmation here in this space. But this, and the reason I bring this up is because this is the first time, and I don't even know how long. I think there was a couple of weeks we had it in the positive territory during the snapback recovery V-shape in March and April. But outside of that, this is an area of the market that's been in neutral to bearish territory for years for us. And so putting it into that positive 35 territory, bullish type analysis, we're looking at retracements right now. Let's see the retracement analysis actually play out over the next couple of days. But it's an area of the market for those bottom feeders that, believe this theme is really being adopted. This is an area of the market that you might want to be looking at to see how it handles those bullish retracements and that ultimate retest of that 200-day moving average. And then healthcare, obviously healthcare got a little bit of positive news today with Moderna and what's happening with vaccines since Pfizer a couple weeks ago. But the reality is we just don't have a lot of confidence in this space right now. I would say out of all the sectors out there, we ranked this one right there at the positive 40 territory. But I mean, a trade above 110, yeah, you could see some momentum. I just think there's so many better areas of the market right now to focus on. And then technology, we just your standard technology ranking that whenever you're in neutrality, sitting at resistance, you're at that positive 40 territory. A breakout, you would obviously upgrade that. And at least today, technology is showing relative strength. I think a breakout on technology has to be traded, though.
Well, especially on that weekly chart. We talked about that Apple chart looking good on the weekly. I think a lot of tech is going to look very similar. Amazon's looking pretty similar as well. And by the way, it is Cyber Monday, and so many of these tech firms are going to be getting some data released here over the next few days about how well they did. And with all of the shopping habits changing this year, I'm expecting they did pretty well, Matt, with online sales. We'll have to wait and see how the markets react to that as we go.
Yeah.
Guys, outside of that, there's only two things I did want to get some quick takes on. One, Mark, China. I did see some notes, and obviously the market, you can give me FXI if you can for a second. Basically, Mark, that China is back in the news a little bit with the Trump administrations, a couple of companies. I believe SMIC, their top chip maker, CNOOC, Canuck, one of their oil and gas producers that might be getting onto some kind of blacklist that would affect share purchases next year. Mark, is there a market-related, analysis here? What's your read on the situation with China?
Well, yeah, I mean, listen, whenever you're at resistance or whenever you're at elevated levels, once again, it's like what I was saying earlier. When Jerome Powell speaks after the market's down 15%, there's probably only upside. But when you're at resistance or when you're at elevated levels, everything takes on extra emphasis. The whole question here is this long lasting? And that's what the market doesn't know, and what the market has zero idea, and it's just pure guesswork. What are Chinese relations going to be like under a Biden administration? I mean, that's the big question that the market is grappling with, specifically for specific companies who do business in China that have Chinese exposure. There's a lot of unknowns here right now. And so it's pure speculation, but these type of news events, they certainly hit the companies itself. Like if you look at CNOOC, that's the ticker symbol. These kind of headlines.
CNOOC?
I don't. What is the ticker?
I don't know if they're traded in the US.
They're not traded.
Probably
in
an
the US.
ADR.
Yeah, they're not traded in the US.
So
probably that CEO chart right there, man. But anyway,
it doesn't matter.
Go ahead, Mark.
CEO. No, I don't know.
It honestly doesn't matter. Nobody's going to trade it.
But anyways, there's specific headline risk on the individual companies that get involved with it all. I mean, we don't know what Chinese relationships are going to look like under a Biden administration. So I think the market is taking a wait and see approach on this level. But whenever you're at resistance, any little market headline is going to cause things to sell off a little bit.
Yeah, I get that. Markets, though, selling off a little bit here today with Chinese stocks. Markets are selling off in general with stocks. I'm not sure there's market implications right now. And I think the market's probably just going to wait and see what to get more clarity on that front. And then the last one, Matt, there was a couple of M&A.
Why is the market going to wait and see? Like, the market doesn't care.
Correct.
The market does not care about that news on China today. I just don't believe that.
Right.
That was the causation headlines overnight.
No, I'm with you on FXI. 100%, I'm with you on FXI. Any Chinese related news is going to have an immediate impact on FXI. I'm talking the broad market today.
No, I mean those were the causation headlines overnight. Yeah. Now, of course, because you can't print the headline, market at resistance fails to break out, selling off a resistance, because nobody would understand what that meant.
No, I'm with you. But
even
hold on, I'm with you. But the stocks that were in the news in China today, nobody even knew what those stocks were. They never even heard of those stocks.
Well, and the other part of it for me, Matt, is that this order itself, even specifically digging into this news, it doesn't go into effect until late next year. So which
is obviously going to be voided, so it's not market relevant.
Sure,
That's my point.
Yep.
Is that the market right now is moving past the conversations that some individuals are still having, thinking it's market relevant when it's really not.
Sure. Yep. Sure.
And but I do think the one thing that I think I'm most curious about with China, and we do not have an inclination yet because Biden hasn't talked about it, but it's exactly what is that relationship going to look like with China? Is it going to be the continuation of what was seen in the last couple of years of escalating tensions, or is Biden going to try to, be a little bit more negotiation there? We just don't know. He has not indicated to us one way or the other, and we haven't heard from China yet. So let's not assume we know what that relationship is going to look like. I think all of us are very interested to see how that relationship looks like.
Mm-hmm. And I think obviously President-elect Biden will be addressing that and dealing with it at some point, but he's got other.
Well, he has to. We got tariffs. Yeah, he has to.
But he's obviously dealing with a lot of other things right now. Coronavirus task force, getting this whole transition.
Well, and technically, we're still in a trade war with China.
Yep.
So this isn't just going to stop because we've elected a different president. Those conversations have to be ongoing. And does the new administration have the same philosophy towards tariffs and the impact tariffs have on this trade war? We don't know that yet. Mm-hmm. We do know traditionally Democrats have favored tariffs more than Republicans have. We know that traditionally. Traditionally, Republicans are very, very anti-tariff. So I know the last few years have kind of thrown a little bit of wrench into that traditional analysis, but let's see how that plays out over the next few months.
Mm-hmm. Mm-hmm. Yeah, I'm with you. I'm completely on board with that. Anything last on China, Mark? Any other thoughts you had?
Nope.
Okay, two quick ones here, Matt. M&A activity, obviously Slack and CRM. We had hinted at that. They made some rumored announcements last week. Slack looks like that deal is going to get announced officially at the end of business tomorrow, Matt, after the markets are closed. CRM is going to be in the Dow 30 draft on our podcast. So
yeah, how high CRM going today?
CRM is one of those high flyers. I know
it's going to get drafted higher than its performance in recent history.
Absolutely.
It will. It's just a matter of who's front running CRM, because Tim knows I like CRM.
So is the rumor on that work deal is done?
Yeah,
sounds like it's done, Mark. It looks like they're going to be moving it into official announcement there tomorrow after the market's closed. And the number of resources I found that had that same news is pretty astounding.
I'm going to miss selling naked puts on work.
You're going to enjoy selling them on Salesforce.
Listen, it's
Salesforce is a better company than Slack anyways. I think this is an awesome acquisition for CRM, by the way. I love the acquisition for CRM. I know it's down on today, but that's typical on an acquisition day, right? Mm-hmm. Company getting acquired is up, company doing the acquiring goes down. But I do like this long term. Slack is a company that I respect. It's obviously a technology we use for our internal communications to tackle trading as well. So I find this level of communication, Slack, and the efficiency of Slack and the things Slack can do from a video perspective in the future, very interesting as well. And don't get me wrong, I know they have stiff competition from some of the other tech companies out there as well. But I see this, like, the price tag's high, right? What was it, 24 bill? Mm-hmm. The price tag's high. They're certainly paying premium for Slack here, but if it's a technology you know you want and you're going to use for years and years and years and years, why not pay the price tag today when in 5 years you would have to pay a higher price tag? And I kind of feel this is what visionaries do, honestly. They make decisions that other people think that's too high of a price, but they see the value 5-10 years from now. And, it's like, I was listening to an interview that Pat Riley did. And Pat Riley's the old Los Angeles Lakers coach, now the Heat general manager, Hall of Fame NBA mind, just a wonderful, wonderful, wonderful NBA mind. And he signed one of his young stars to a max contract. It's one of their important young cornerstones by the name of Bam. And Bam, like, people were surprised. He paid him max price for that. And he says, why? I can lock him in right now for 5 years. I can lock him in at this price. I know he's a cornerstone of our franchise. I know he's not going anywhere. So why not just lock him in right now for the price I know right now, then pay a higher price down the road? I see that as a visionary type of movement. And Mark Benioff, I have a ton of respect for Mark Benioff, how he approaches Salesforce, how he approaches the management style, how he approaches his acquisitions at Salesforce. I love his visionary mind of Mark Benioff, and I think the Slack acquisition is something that, yes, did they pay premium? Absolutely, they paid premium for Slack. $24 billion is a big price tag, but I think Benioff's looking at this down the road 5 years from now and saying, we want this technology. We have the ability to research and develop. How much time is it going to take? Are we going to get it right? Or can we just go out there and acquire this with shares? Let's use debt. Let's acquire it. I like the move. I think it's a good move long term.
I love the move. And obviously, from a CRM perspective, I'm a long-term believer in this company. I thought it was a great addition to the Dow. I think it reflects current modern economy. They've had a lot of big news this year, and they've been stuck in the mud now for 2-3 months. So it's an interesting company.
It is. And one of the questions on Slack was, how are they going to monetize Slack? Right? Because they got tremendous viewership. They got tremendous user base. They have a growing user base, but how are they going to monetize that? And here's a digital media expert in the name of Mark Benioff, who learned how to monetize the back end of internet purchases. I'm willing to bet Mark Benioff figures out a way to maximize the monetary value of Slack here.
I believe so as well. I think there's a good marriage. That's going to be a very, very interesting one. And
doesn't the marriage just make sense?
It makes a lot of sense. You got back end sales.
It's like you see two people. It's like, yeah, they just deserve to be married. Like, that's a marriage that's just going to last. And then when they're divorced in 5 years and the dude has a drug problem, you're like, I never saw that. It wasn't in the cards, right? But at the time, it made sense. At the time, we don't know what's going to happen 5 years from now with Slack and CRM. At the time, I think this looks like a good marriage.
If you believe in it, you have to love the price they're getting, Matt. They IPO'd a year and a half ago, and I know their IPO price came out in pricing literally right at like $38 a share. It was stuck in the mud here for a year and a half. Slack is starting to cook a little bit. CRM is coming in at the perfect time if you're believing in the product. So,
and how many times personally have you and I looked at Slack this year and been like, why didn't Slack get that type of momentum that some of these other
Slack was hated,
right?
Slack was hated.
I know people are saying they're paying premium for Slack today. I just don't think they are.
Mm-hmm.
I think it's a good product, and I think Benioff's looking at this long term as an acquisition he wanted to do. He's gonna learn how to maximize that. I just believe that.
It's going to be an interesting one. And then not as interesting from a news perspective to me, but a bigger deal. SPGI agreed to merge with IHS Market, which is INFO.
Can I start with this one?
Yep.
I have far less interest in this one.
Yeah, I do too.
Talk about your most boring $44 billion acquisition ever.
Yeah.
Like this is a $44 billion acquisition. It's like
biggest deal of the year, by the way. From a merger perspective. So
all I want to do is talk more about Slack. That's all. That should tell you the importance of brand awareness.
Sure.
Obviously.
But I also tell you this deal is probably just a good deal.
It's a good deal.
It's probably a good deal for both.
It's true. It's true. It's a good deal.
Anyway, all right, guys, that's all I got today. Matt, can you go to tackle trading real quick? A couple things I do want to talk about here is before we end the show and communicate with our team out there. Number one, Black Friday, we sent an email out announcing our sale. If you just click on the store there, Matt, let me kind of walk them through this for a few minutes. And like we've done every year for several years now, we have holiday promotions like many, many companies out there. We've got a couple things on sale right now that if you're not aware of, I want to make sure everybody is. We put our annual pro on sale like we've done in Thanksgiving's past around this time of year, Matt, and the step system on sale. And we've also created a bundle. Now, we are holding a special webinar tonight with Coach Noah Davidson, 8:30 p.m. Eastern, where he's going to be talking to the team about how to use all of this information to tackle trading, apply it. It's not just going to be about our promotion, but I'm sure he will be talking a lot about that promotion tonight as well. If you're a Team Tackle member, there's a couple things. Number one, if you're on the annual, you can re-up for $900, $897 right now. And that is ongoing, I think, until a week from Friday, Matt. There's a countdown on the website as well. Step system's half off. So if you've never taken the premium course, the step system, Matt, it is 50% off. It is our number one course for technical analysis, swing trading. I think it's the best course we've got. So if you've not yet taken that, I would definitely take us up on that step course if you're looking for content around your directional trading. And then just that bundle. If you don't have either of them, you can pick up the annual and the step together. So
Mark,
we bundled it together. Go ahead.
Yeah, Mark, correct me if I'm wrong, but our pro community, if they do have an annual right now and they just want to upgrade it, instead of going subscription, they can just contact team at Tackle Trading, correct?
Yeah, just listen, I take care of it automatically. Let's say you're on a monthly membership and you want to do the annual. I take care of all of the administration work to give you all the time left on your monthly, add it to your annual, make sure that the billing's good. If you have any questions at all, you can email me at Team at Tackle Trading. If you don't know when your annual's up, you can email me. I can help you with all of that.
Yeah. So very quickly, guys, if you are currently a pro member of Tackle Trading and you simply want to continue your annual membership, you can contact Team at Tackle Trading. That's how you continue that. If you are on subscription right now and want to take advantage of the discounted price so you don't have to worry about a monthly payment, you can go to Team at Tackle and Mark can take care of you. If you are new to Tackle Trading, I would highly, highly, highly recommend the bundle instead of just the annual, because in our scouting reports, which we do the stock, options, commodity, and Forex report every weekend, we use the step system as our base form of analysis in the scouting reports. So that will help you understand how to approach the scouting reports a little bit more appropriately. And outside of that, I believe we're going on for 2 weeks in these annual sales. We do it every year. So if you're on the fence here, guys, this is a great way. Tackle Trading is the best place to be. It's going to help you navigate the markets on a daily basis, weekly basis, give you the information, the education, and help you with the application. So let's get out there and do it right, guys. But outside of that, let's have some fun here this week. Got a podcast coming up. I'm so excited for the Dow 30 breakdown. I'm so excited for the fantasy draft in the Dow.
Well, I'm excited because my fantasy football team's out. So I mean,
Well,
now I got something else to draft. So that gives me a little bit of joy here. No doubt about it. Hopefully I do better with this draft that I did with.
I have my best chance to win our league that I've had in 10 years this year.
You got a great team, bro.
I gotta finish it out though. Got to finish it out.
Yeah. And, Mark is still afraid of Linda, I believe. She was talking trash earlier as well. Mark,
who lost Death Ball?
Wasn't there a bet?
I'm probably going to lose this week. It's not over, but I'm probably going to lose this week. My team
it's a good showing.
Probably
Top three, Mark. Good showing though. Top three.
What was the Dallas Washington bet, if I remember?
Listen, as long as Emily doesn't show up, it doesn't. But I do have her song ready when she shows up.
41-16, kind of.
I do. The bet was 3 McRib extra value meals, and if you don't think I'm getting some McRib extra value meals coming in the coming days, then you don't know me. It's going to be a glorious week. I have a friend I talk to every day, and she's like, "So why are you in such a good mood?" And I'm like, I can't even say what I said, but it's effing McRib week.
I was very nervous there for a second. My blood pressure literally went up a few notches there.
Anyone that knows me knows I swear 4,000 times a day. It is shocking I don't on the halftime as often as I do.
He's got a worse mouth than a sailor.
But yes, Emily and I had a bet that if Washington won, I would write her a song. And I wrote her a song, and when she shows up on the halftime, I will sing it to her.
She needs to be here live.
It's the most wonderful team of the year. And it goes on to say some lies about the Washington Redskins.
She's in the chat.
Wait a second, hold on. They're not called the Redskins, right?
Listen,
and
song is
they're the Washington football team.
I didn't say Redskins. I said it's the most wonderful team of the year. They got. Listen, I'll save it for Emily when she shows up in the panel one of these days. But the song is written. It's ready to be sung.
Dana, what's that one controversial song? The Christmas song that everybody thinks about, like.
Oh, it's the weather is cold out. What's
baby, it's cold outside.
Baby, it's cold outside.
Dina, if you're there, I'm not in the halftime chat here today. I just want a song on that. I want Mark and Emily to sing that song on the halftime report.
A little duo. That would be fantastic.
Yeah. and Emily can play the role of Janet Yellen, and Mark can play Steve Mnuchin.
I miss the Mnuchin.
I miss Mnuchin already.
And I've said it several times in the last 6 months. I grew a real appreciation.
Halftime crew, we're obviously done with the actual analysis today.
You miss the Mnuchin.
I do.
I'm sure you're going to hear from him. I don't think you've heard the last from Olsen.
He's going to go back to business in Wall Street.
He's going to go run Goldman.
He'll have something else to do, I'm sure, and say, he might go back just to Wall Street and be a guy like that.
I thought he did.
Wall Street's going to pay him mint to go back to Wall Street. Are you kidding me? Former Treasury Secretary dealing with Janet Yellen.
And in a weird way, I'm going to miss Baghdad Bob too.
If you're Goldman, how much money do you pay Mnuchin just to come on to be a
Dude, you pay the mooch whatever he asked for.
You pay the mooch whatever he asked for, right?
Yeah. I believe so as well. All right, guys, let's wrap this one up here. Yep. By the way, that event here tonight is going to be right here on YouTube. You don't got to find any special webinar links or anything like that. And if you're Team Tackle, somebody just type it in the chat so everybody's aware of it. I appreciate when you guys help me out with this kind of stuff. 8:30 Eastern tonight with Noah. We're going to have a 1 hour live event. Come and join us. We're going to go cut our podcast like we do on each and every Monday. Great job here today, Matt. Great job, Mark. It's been a fantastic show. We are done today. We'll be back tomorrow with our halftime report, same time and